Joining me now, Heather Zumarraga, Senior Vice President of the Vision 4 Fund. And Heather, good to have you with us. And what a difference a week makes, huh?
Hi, Lou. Yes, it's amazing. What a great start to the new year thus far. We did enter bear market territory at the end of last year in 2018. And since then, especially after the stellar jobs report on Friday that we got 312,000 jobs. You had a great interview with White House Economic Counsel's Kevin Hassett, who had said he'd never seen that number ever before. Yeah. So that's really helping the markets move higher as well.
Yeah, the strength of this market suddenly, after all of the turbulence that preceded the last couple of days, are we out of the woods, as it were, when it comes to the volatility that we've seen, or is that dependent on what factors was that dependent upon?
Well, I do think China does matter. China and the Fed are the two biggest drivers of the market right now and the two biggest risks. So while I don't think we're quite out of the woods yet, we do have positive talks with the Chinese. Day one again resumed since the Buenos Aires G20 summit in Beijing today. And we had the Fed on Friday, Federal Reserve Chair Jay Powell saying he will remain patient and be flexible to economic conditions.
Yeah, I personally believe that Fed has been the most important factor in this volatility as it worked against the direction of market rates for about a 3-month period. I mean, going back to October 3rd when they said they were basically going to be on autopilot. And I give Jerome Powell great credit for acknowledging that, in effect, that he was wrong about interest rates, that he was wrong about being so structured in his outlook, and admitting that he will be more adaptive and flexible in dealing with the runoff of assets on the balance sheet, the Fed's balance sheet. I thought that was a remarkable performance that he gave.
Well, so did the markets, Lou, and that's why the Dow and the S&P and NASDAQ all had big gains on Friday. A solid follow-through today tells me that, this rally really has legs, I think.
And what do you see in the days and weeks ahead? We're moving into a new round of earnings. We're looking at the prospect of real good news on trade, and we've got good news on interest rates, which continue to suggest inflation is not the big deal that the Fed feared.
No, you're right. Fed Chair Powell even addressed that on Friday at the American Economic Association roundtable. He said that inflation remains under control right now. We're tracking at around 2%, the Federal Reserve's target. And we do have positive revelations out of China. China has already agreed to buy more from us. The details, specific details, are unspecified, as well as the time, but they are buying more soybeans and rice. They have dropped U.S. auto tariffs, and they're going to open their markets, hopefully. They've said this before, but to more foreign trade and have more open markets. And although they said that before, I think this administration's tariffs are really putting the pressure on China, and they're coming to the table to negotiate finally. Yeah,
there's no doubt that they're putting pressure, and that the Chinese are facing some markets that are, I won't say imploding, but are deteriorating at an extraordinary rate, and an economy that is just filled with excess capacity. Which is not helpful for a strong outlook for the Chinese. That is, they've enjoyed almost unprecedented growth rates over the last 20 years. That appears to be at an end. And we're looking at technology, deeply troubled, big runoff, even as from Election Day 2016, this president, his election till now, it's almost $5 trillion that have been added to the equities market. How much more do you think can be added this year?
Well,
just put a little number on that.
Yeah, I'm expecting at least single-digit returns out of the markets this year. And again, as we get positive revelations about the Fed, which we did on Friday, and trade, Chinese markets are really hurting. They're in bear market territory, down over 20% from the highs. Their exports are contracting, and their manufacturing sector is at the lowest levels in 3 years. So I think the U.S. is doing much better on it. When you look at things on a global basis, we have a global slowdown, but the U.S. may still be the best place to invest.
And automobile units, vehicle units in this country, over 17 million last year. Who thought that would even be possible? Well, now all we have to do is get housing repaired. Heather, good to have you with us. Thanks so much. Heather Zumarraga.
Thanks, Lou.